Thank you, Mr. Chairman. Ms. Gordon, while FHA's move to reduce insurance premiums will help first-time and minority home buyers, there has been very little discussion about FHA's multifamily business, which helps support the development and preservation of affordable rental housing. And places like New York, Boston, we're facing a shortage of affordable rental housing. How has FHA's multifamily portfolio performed in recent years, and can FHA do more to support affordable rental housing?
So first, thank you for mentioning rental housing. We are having a genuine rental housing crisis in this country right now, where for the first time since we've been tracking it, more than half of all renters pay more than 30% of their gross income for rent. Anybody who's tried to rent in D.C. knows about this. It's very important that FHA and the other HUD programs that support affordable rental housing production and especially preservation of aging stock continue in place. The portfolios, the multifamily portfolios across the board have been doing well. And I will tell you, I am not an expert on multifamily. I didn't come here today with an agenda for what FHA should do, but it is extremely important to continue to fund the production and preservation of rental housing, or this crisis is going to become even worse.
Thank you. Mr. Rossi, you have said that FHA's dual missions to provide access to affordable credit and to protect the MMI fund are often at odds with each other. However, many argue that the recent premium reduction will in fact address both missions. Isn't the right pricing of FHA's insurance an integral piece of ensuring that FHA's market share is large enough to provide for the recapitalization of the MMI fund?
Well, actually, and this is to my testimony, I'm not sure that the actuary report, even we know whether or not we have actuarially fair pricing today, even before the 50 basis point reduction. That's part of what I'm just discussing here. And so from that standpoint, we have to step back and focus more, I think, on the pricing as we see it today, and make sure that that's all right before we actually move further into deciding whether to expand or whatnot in terms of market share.
What is your take on that, Ms. Gordon?
Well, I don't think that FHA is taking this action based on just a market share projection. It's really that at this point they had hiked the premiums up so much that they had really sort of overshot with the credit quality remaining really, really high. I do think it's important to remember about this whole actuarial report, and I am neither an actuary nor an accountant, but this actuarial report and the number that they come up with for that capital ratio, this is a very conservative approach. This assumes that if FHA were to shut its doors today, does it have enough money to pay every claim for the next 30 years? I know that if we applied that test to my family balance sheet, I'd be in big trouble. It's an extremely conservative approach, and so again, while I can't get into the details of exactly, how the actuary does their work, I think it's important to remember that right now these books of business are so clean that they are throwing off these record profits and will certainly be continuing to shore up the fund.
Thank you. Mr. Gupta, you described in your testimony how FHA and private mortgage insurers can and should serve as complementary forces, with FHA focusing on underserved markets that the private sector may not be suited to reach.
Yes.
While the U.S. Mortgage Insurers Trade Group, which you chair, has expressed concern with the recent FHA premium reduction, saying that private insurance has the capacity to expand access to mortgage credit, how can this position be reconciled with your testimony that many FHA borrowers are not good candidates for this type of product?
So this is exactly the point in my testimony, Congresswoman. If we think about FHA and private mortgage insurance serving complementary roles, that's exactly what I mean. Private mortgage insurance, as I stated in my testimony, still offers 3% down payment loans all the way down to 620 FICO, Once we start going below 620 FICO, from an underwriting guidelines perspective, it's difficult for a private company to actually price loans and put borrowers in homes who are going to be in those homes long term. Second, from a pricing perspective and competing with FHA, once we go below 620 FICO, it's not possible for private MI companies to compete with FHA in that space given the FHA pricing. So we believe that we have the right complementary rules when it comes to low credit borrowers. Our challenge is when FHA reduces price, and we are talking about 680 FICO and 760 FICO, the charts we included in Appendix C of my testimony, you can see that after this price reduction, FHA becomes very competitive.
So you're telling me that those that score at lower than 620, they should pay more?
Based on, for a private MI company, absolutely. We price our risk based on risk-based pricing because we have to generate a return for our investors.
Ms. Gordon?
Well, and the FHA does not risk-based price, which is one of the key differences between what FHA does and what the GSEs do right now, and they do it because they have different policy objectives.
Thank you, Mr. Chairman. I yield back.
Thank you.